Hey everybody, welcome back. Sive is here with the Forex Peace Army.com. Let's have a look on the euro currency. You can see market stands in a tight range in general, but a few details we've got in the recent couple of sessions that give us some background, some new information to think about. So on the daily, you can see that performance mostly stands the same. We have bearish trend direction by the MACD. And in fact, we could say that market stands relatively tight range. Attempt to move higher was not really too successful, so you can see that market just has reached the 760 area that we considered for taking short position and then dropped. So mostly we are interested with the information that stands on the lower time frames, but in general, consolidation upon support area, it has some bearish features. So it shows that market just lay upon the support and holds it without any attempt to go higher or changing the direction, something like this. So from that standpoint of view, this probably has some bearish background. If we take into consideration the pattern that we have on the weekly chart, it's becoming even more important. On the 4 time frame chart, here's what we have. We said that for a market to keep the bearish context, it is critical to show and support the idea of this reverse head and shoulder shape. So you can see that market recently dropped back down here, shows minor pullback, and recently two side-by-side bearish grabbers have been formed that suggest drop below these lows. In fact, this pattern has really vital importance to us, just because if you will see that market is moving higher, breaking the top, it's obviously will suggest the failure shape of the head and shoulders, which means move above the top. And on the daily chart, it would mean that market just will keep going with this existing momentum with a further extension to the upside. That's why this area in general around 1760 is critical for bears. So they do not want to see that market is moving about. At the same time, market now is forming the clear triangle consolidation. So the right arm of the pattern, of this big pattern, start taking the shape of the triangle. Correspondingly, as usual, triangle has a feature to keep the door open for both directions. So for example, we could suggest as a downside butterfly here, but nothing could prevent our suggestion to think about the upper butterfly as well. If upper butterfly will start forming, it simultaneously suggests possible failure with hand shorts and further upward continuation. So here I show you kind of the conservative scenario probably. Theoretically, we could suggest even this triangle. So market could start the actually downside performance with the butterfly right from here. But, well, and based on the grabbers, this probably might happen. It's one of the possible scenarios. But I prefer to use a bit more conservative view of what will happen if somehow market still will flirt a bit around current area and without immediate downside continuation. One of the possible scenarios might be ABCD pattern back to the critical area. We could get here guidance triple to sell. And that will be a very comfortable point to think about another attempt to go short. So in general, you could try to do this with the grabbers as well. So maybe this will be also proper decision. But if still we will get it, that might be interesting just because market will return back to the critical area. Here we could place very tight stop. So market either has to turn down with the bearish or breakout means that it will not go down at all. So it will be upward continuation. So at this point, I call such a points usually as a culmination one because they provide best risk-reward ratio. It doesn't increase the chances on success, but your risk in these areas will be minimal. So that's theoretically what could happen in the current circumstances. And we could get, for example, the downside butterfly. So from this point of view, what conclusion we could make? First of all, we are not considering currently taking any long positions because we have grabbers. Overall context remains bearish, as on the 4 time frame chart, as on the daily chart. That's why we're mostly suggesting taking the short position, if you, of course, do not have it. So now we have two different points to do this. Either right from here, based on the grabbers on the 4 time frame chart that we have. suggesting drop below this area when you will have to move stops to the break even, and in general it suggests that here's might be the starting point of the butterfly as well, as I have shown you. More conservative view tells that maybe grabbers will not work, market still will be able to show this ABCD retracement. In this case, we start watching for this one. These two scenarios are not contradictory, so you could follow first to the one. If it will not work, you could follow to the second as well. If you're conservative enough, you could wait just for a second scenario, in the case if market will show this pullback. But the risk that we will take that you just miss this opportunity if downside action starts immediately. You could split your positions in parts, for example, taking, for example, 25-30% of your trading line here. If you will get the pullback back to the 1735, 1740 area, you could add more in this case. There's a lot of different options exist, so you could choose what you like more. But in general, every situation looks as we just described.